G'day guys, welcome to the video. Today I wanted to show you about a very interesting case that has come up over the weekend, which regards the Australian Tax Office actually losing a case against an Australian taxpayer in regards to their residency status. So what I'm going to do here is share my screen with you and show you the article that I'm referring to here, and we're going to talk through it as we read down the page together. So here it is. ARTA overturns ATO decision in tax residency case. The ARTA, that's this mob here, the Administrative Review Tribunal, where they review decisions made by Australian government agencies, departments and ministers. It says here, the tribunal has found that the ATO incorrectly treated a taxpayer as an Australian tax resident in a case examining the tax treaty tiebreaker rules. And this is very interesting. We'll talk a bit more about the tiebreaker rules as we move down the article. Basically what it is, it's an article that is part of a tax treaty agreement. So it's sort of like a section of a tax treaty between two countries. In this scenario, we're talking about the tax treaty between Singapore and Australia. So there's a picture of the tribunal there, and it says the case, Booley and Commissioner of Taxation, involved an applicant who was a dual resident of Australia and Singapore and had a permanent home and habitual abode in both countries. So what they're talking about here, when you refer to this article in the tax treaty that governs residence, it's all about when there is a conflicting claim by two countries. If both countries are claiming you as a tax resident, potentially, Singapore and Australia in this case, you would refer to this article in the DTA, the tax treaty, to decide once and for all which country gets to treat you as a tax resident. So there's three tests to it. The first test is where you have a home available to you. And in this case, they're saying that he had a permanent home available in both countries. So if you can't satisfy the first test, you move to the second test, which is where you have habitual abode. This is the country that you tend to go back to when you finish doing whatever you're doing. If you're going traveling or whatever, this is the place you go back to, the habitual place where you form your abode. In this case, it was argued that he had both an habitual abode in Singapore and Australia. So there was no clear-cut winner on that level of the tiebreaker test. So then they moved down to the third part of the test, which is all about economic ties and personal ties. So economic ties, where are your investments, where are your bank accounts? Personal ties, where do you have family, basically? And we don't often see residency cases that go down to that third case. Normally, when we're talking to clients, we like to resolve residency cases very clear in the first part of the tiebreaker rule, which basically is about where is your permanent home available to you. So if you can satisfy that test, that is a really good way to not end up in the tribunal courts of the Administrative Review Tribunal for the ATO. Anyway, moving further down the article, it says the main issue of the case was that Booley, that's the taxpayer, was treated as a tax resident of Australia rather than Singapore for certain income tax years. Just talks a bit about having the tax treaty between the two countries here, providing tiebreaker rules, That's what I was just talking about before. And it says here the tribunal needed to determine which country Booley's personal and economic relations were closest in. So there was no clear-cut winner for permanent home. There was no clear-cut winner for place of abode. Now they're down on the personal and economic ties test. So it says here between 2019 and 2023, the ATO issued a series of income tax assessments and Div 293, that's in regards to superannuation if you're a high income earner, in regards to taxable employment that was earned in Singapore. So he was working over in Singapore during this time. But the ATO argued that he was still a tax resident of Australia and wanted to assess him on that Singapore income in Australia, not just for income tax, but also his Div 293 here, which is an extra 15% tax on superannuation if you're a high income earner. So it says that Booley lodged an objection to the assessment that under the tax treaty, he was treated as a tax resident of Singapore during those income years, meaning that his employment income should only be taxable in Singapore. The ATO disallowed this on the basis that he was to be treated as a tax resident only of Australia under the tiebreaker rules. So Booley's saying under the Thai tax breaker rules that he was not a resident of Australia, that he was indeed a resident of Singapore, and Australia is saying that under those same rules they believe he was a resident of Australia and therefore taxable on his Singapore income and his Div 293 superannuation tax in Australia. So here we've got some more details of the case here. During this time, Booley lived in a leased residential property in Singapore. However, and this is very interesting, his wife and his youngest child continued to live in their Sydney home. So here it said he had a home available to him in Singapore, the leased property. He also had a home available to him in Australia where his wife and child lived. Therefore, that's why he could not satisfy the permanent home test of the tiebreaker rules. He spent 173 days present in Australia in 2018, 78 days in 2019, 189 days, 144, 108. So clearly he was not spending most of his time in Australia. It says here he spent approximately 38% of his time in Australia. However, that is still a pretty hefty amount of time to be spending in Australia as a non-resident. And that's where he ran into troubles here. Yes, he may have won the case, but he had to go to a tribunal to get that result. And I'm sure there would have been costs and certainly a lot of mental pressure that would have come along with that. But that is quite interesting. Normally when we're talking to our clients, we'll always tell them, if you're leaving Australia, leave Australia. Sure, you can come back for a holiday, but I wouldn't be coming back and spending 38% of your time here. As some of you may know, that you've got there's new proposed residency rules that are not legislated but under proposal at this point in Australia, where they want to limit returns to 45 days. That is, if you're a non-resident, if you come back to Australia for 45 days, they're going to say, now you are a resident if you spent that amount of time in Australia. Yeah, look, he may have got away with this one, but yeah, I wouldn't be coming back and spending this kind of time in Australia, 144 days in a year, if you want to be a non-resident. You are asking for trouble. So in the decision that the tribunal came to, they referenced the fact that he earned the bulk of his income in Singapore during this time. And because that was the case, Singapore was the centre of his daily life and source of economic lifeline for himself and his family. So they're saying that his economic ties were greater in Singapore. The tribunal also said that Booley owned a home in Sydney. It was not an income-producing home, so that, didn't affect his economic ties in Australia. He wasn't producing income from it. So while having that home, it affected the first test of the tiebreaker rules, the permanent home. It didn't affect the third test, the economic ties. Therefore, it did not alter Booley's actual recurring and economic activity, which was centred in Singapore. The case also gave little weight to remaining economic ties, such as he had private health cover, Medicare, and bank accounts in Australia. And now they talk about personal relations, which is quite interesting because he had his wife and child in Australia. So you could definitely say, you can understand why the ATO would have said that his personal ties were higher in Australia, having a wife and child there. So what they've said, the tribunal found that his economic and personal relations were in the composite stronger than his ties were in Australia. So he spent the bulk of his time in Singapore, earned the bulk of his income in Singapore, but it says though his personal relations to Australia were stronger, he had meaningful personal relations in Singapore as well. So that sounds to me like, yes, his wife and child was in Australia, but he had a lot of family in Singapore. So this was probably someone who was born in Singapore who migrated to Australia later and remained, had his extended family, parents and cousins and all of that still based in Singapore. Goes on to say, while his ownership of assets in Australia was not insignificant, they did not produce income and paled in their significance when compared with the primacy of his income earning activity in Singapore. So that just saying again, his economic ties in Singapore were stronger. So this is a very interesting case. We don't see stuff like this very often. So when I saw this come across my inbox this morning, it certainly piqued my interest. And as I was saying before, residency, when there's a lot of money at stake, it's not something you want to get wrong. If you want to make a clear move out of Australia and you're doing it for probably a bunch of reasons, but I'm sure economic and tax reasons might be part of that as well. If that's what you're doing it for, You want to make it very clear that you don't end up in a tribunal hearing going through the courts trying to argue your case with the ATO. Yes, he won this case, but what did he have to go through and what cost did he have to incur to get the win? But this is a very interesting application of how the tiebreaker rules work in a tax treaty. Now, if you guys are interested in making a tax exit from Australia, if you're moving overseas, that's what we do here every day. So head over to our website. There's a link in the description. You can get in touch with us there, and we'll make sure that you do it the right way, and we'll make a plan for you so that you can get a clear residency decision without having to go through the court system like this guy did. You don't want to be in that position, and it's just not worth taking that risk if you've got significant assets in play that could be up for taxation depending on the residency decision by the tax office. So we'll leave it there, guys. Thank you for watching. Catch you later.